We live in a complicated world. What should investors be thinking about today?
I think investors have to be keeping their eye on three major global challenges and the interaction of those challenges and the effect they can have on markets and asset prices. Let's start right here at home in the United States. We're mired in an anemic recovery, the economy growing at 1.5%, 2%, not enough to create the jobs that are required or the revenue that is needed from a more robust recovery. We face major solvency problems because of the amount of debt and the ongoing size of deficits. That collection, just in the United States, is daunting enough. But we add on top of that the situation in Europe. The Eurozone nations are facing serious solvency issues. That alone, again, would pose a major threat for the economies of the globe. But then we add on top of that something that's really unprecedented, a $10 trillion monetary experiment that's being conducted by the Federal Reserve, the Bank of England, the European Central Bank, and now recently joined by the Bank of Japan and the Bank of China. An experiment into waters that have never before been attempted by monetary authorities. What are the probabilities that the current collection of global political leaders and financial institution leaders will successfully manage their way through resolving all of those issues? We think those odds are actually quite small, and that the world's in for some significant shocks and jolts along the way.
Have the world's economies made progress in fixing these problems?
Certainly there's been modest economic recovery in the U.S. and in Europe, but at the same time, the fundamental challenges of the magnitude of debt in the United States and in Europe remain. In fact, the overall debt in the United States is larger than it's ever been and growing as a percentage of GDP. If you look at the Eurozone nations, collectively, total public and private debt is substantially larger than it was 5 years ago before the financial crisis. So there have been many meetings, there have been summits, some actions taken, but mostly deferring actions, the hard actions that are needed to solve these types of problems. And that is where markets tend to suddenly recognize the magnitude of these types of problems, and when they do, the adjustments can be substantial and severe.
What are the questions investors should be asking in the face of these challenges?
Well, one important question is what is the real value of an asset that's, whether it is a credit instrument or a stock, where its price has clearly been inflated by aggressive monetary actions by the Federal Reserve Bank. We see what the price is of those assets today with the active buying on the part of the Fed, but what will it look like when the Fed stops buying or when the Fed starts to sell those assets? So it's dangerous territory to make assumptions about today's valuations. Whether that conveys a fundamental underlying value or not is a big question.